If you're thinking about buying your first home in the UK, you've probably already discovered that the process speaks its own language. There's an agreement in principle, then a fact find, a credit pull, then a survey, then a solicitor, then a mortgage offer, then exchange and completion. And somewhere in the middle of all that, you're supposed to find time to actually choose a house. Now, if that all sounds a bit overwhelming, then this video is for you. I'm Patrick Weightman, a mortgage and protection advisor based in the East Midlands, working with first-time buyers up and down the UK. What we're going to do over the next quarter of an hour or so is walk you through the whole process, end to end in plain English, every step in order, with all the bits that nobody usually tells you included. Now, I'm dropping this down in 10 parts, and the chapter markers are in the description below. So if you've already done some of this and you just need the bit about the surveys or the bit between the mortgage offer and getting the keys, jump straight into it. The whole thing's here for you when you want it. Right, as with all good stories, let's start at the very beginning. The journey doesn't start with a mortgage application, it starts with a thought. Usually that thought arrives somewhere between paying another month's rent and seeing a friend post their completion photos on Instagram. And it's the same thought every time. Could I actually do this? Am I anywhere near ready? And here's how to answer that in 2 minutes flat without ringing anyone. 3 numbers tell you everything you need to know at this stage. Number 1, your deposit. What have you actually got saved that you'd be willing to put into a house? Not your emergency fund that stays where it is, the deposit money. Even if it's small, write that figure down. Number 2, your annual income, and that's the whole household income if you're buying with someone else. And it's gross, so that's the number before tax, not after. And number 3, your monthly debt payments, credit cards, loans, car finance, and buy now, pay later agreements. Add them all up. Quick rough check. Most UK lenders will lend someone around 4 to 4.5 times your annual household income, minus an allowance for your debts. So if you're earning around 50,000 a year between you with no debt, the rough ceiling is going to be around 220,000 of mortgage. Add your deposit on top, that's roughly the value of the house you're in the game for. But that's not the answer as to whether you should buy. That's just the answer to whether you can. If that number looks kind of close to the houses in the area that you want to live in, then the next step is to actually talk to somebody. If it's miles off, it might be a longer game. Either way, you've now got an answer to the question, am I ready? Rather than a vague feeling, and that's progress. If the numbers look promising, then the next step's what I call a discovery call. And I want to demystify this completely because it's the single most common point where people get nervous and go quiet. Here's exactly what a discovery call is. It's a relaxed 20-minute phone call or video chat, that's it. No formal interrogation, no quiz, no commitment. What we actually want to do on that call is I ask you what you're hoping to achieve, where you'd like to live, roughly when, what your starting position is, income, deposit, any credit issues you know about. I keep it all high level. I'm not asking you for your bank statements at this stage, I'm trying to get a picture. And at the same time, I tell you about me, who I am, how my complaints procedure works, what I charge, how I get paid, because you should know exactly what you're walking into before any forms get filled in. At the end of that call, one of 3 things has happened. 1, your plan looks viable and we book a proper fact find. 2, your plan isn't quite viable yet, but it could be in 6 months with a few specific things addressed, and we discuss what those are. 3, it's just not going to work right now. And I'll tell you that because honestly, there is no point pretending otherwise. I'm not going to try and sign you up to anything on the discovery call. I'm trying to work out if I can genuinely help you. There is no charge for the discovery call, there is no obligation after it, and there is nothing scary about it at all. The thing nobody mentions is a good discovery call should feel like a chat. If it doesn't, you're talking to the wrong advisor. Right, so assuming the discovery call went well, the next things that happen are admin. And I want to walk you through them so nothing looks suspicious when it lands in your inbox. First, you're going to get a welcome pack from me. This is a document that sets out in writing everything we covered on the discovery call. Who I am, what I do, how I'm regulated, my charges, how to complain about me, our company details, our FCA registration number. Read it. If anything in it surprises you, ask. It's there to be transparent and not to be skimmed over. And secondly, you're going to get an Experian link from me to verify your identity. Yes, the proper Experian, the one you've all heard of. This is how regulated firms verify ID without having to ask you to send a photo of your passport over WhatsApp, which would be daft. All you need to do is click the link, follow the prompts. It takes about 10 minutes, if that. And third, I'll start asking you for documents. Not all at once, just a list of what we'll need for the fact find. For most people, that's 3 months of pay slips, 3 months of bank statements, every account for every applicant. And of course, your last P60. Self-employed and company directors, the list is longer. I'll cover that in another chapter. But I want to add a quick note. There's a moment right here where people sometimes go quiet. They get the welcome pack, they get the Experian email, and a little voice says, "Is all this legit?" Well, it is. But if you're ever unsure about anything, just ring me. Genuinely, I would rather you check than worry. Now, this is the chapter that most people would skip, and it's actually the one that saves the most time. Sorting out your paperwork properly is what turns a mammoth mortgage process into a really, really easy one. Here's the full list by category. If you're employed, we're going to need 3 months of pay slips, 3 months of bank statements for every account, and yes, every account, including the savings one and the joint one. Your last P60, photo ID, and proof of address for the last 3 years. And we're also probably going to need your national insurance number. If you're self-employed, then the picture's going to be a bit different. You're going to need 3 years of SA 302s. These are the tax calculations HMRC produces from your self-assessment, and you can download them from your HMRC online account, or your accountant will have them. 3 years of the tax year overview documents to go with them, and 3 months of business and personal bank statements. If you're a company director, it's a bit different again. Salary plus dividends, both shown. Sometimes lenders use a split of company profits, which can be more generous, but it requires accountant-prepared accounts. We'll work out which lenders to approach and what suits your circumstances when we get into the fact find. One specific tip that genuinely makes a difference. Start getting your documents scanned now before you need them. Put them all in one folder on your laptop called Mortgage Docs or something similar, and when the time comes, you're not scrambling around to find things. And a little warning for you. Do not take out any new credit between now and your mortgage offer. Not a sofa on finance, not a new phone contract, not a car loan, not even a credit card. Lenders look at your credit profile right before they issue the offer, and a new account in the last month or two can sink an application. If you absolutely need to take credit out, talk to your advisor first. So while you're gathering your paperwork, you're also going to be pulling your credit report. This step is more important than most people realise. And there's one thing that nobody ever mentions to people. There are 3 big credit reference agencies in the UK, Experian, Equifax and TransUnion. Mortgage lenders use different ones, sometimes more than one. And your file at each one isn't identical. So checking just Experian, which is the big one that everybody knows, leaves blind spots. And there could be something hiding in those blind spots. The simplest fix is a service called Check My File, which pulls all 3 agencies into a single report. There's a free 30-day trial. I'll put a link in the description, and I do get a small affiliate fee if you sign up through that link. It doesn't change the service, and it doesn't cost you a penny. Now, what are you actually looking for once you've got that report? Accounts that look strange, old credit cards that you thought were closed but aren't, a car finance agreement you should have ended but is still showing, addresses that look wrong. Lenders check that the address you've given matches your credit file. If you've got a mismatch from a flat you lived in 3 years ago, get it sorted. And then there's the electoral roll. Are you registered to vote at your current address? Lenders check this, and not being on the electoral roll is one of the more common quiet reasons for an application to take longer. Late payments and missed payments on that credit report, a couple of small ones from years ago, are usually fine. Recent and frequent ones are a different conversation. If you've got any, talk to your advisor before applying. There are lenders that take a sensible view, there are lenders that don't, and an advisor knows which is which. Now, a bit of honest reassurance, really, because this stresses people out. A credit file is rarely as bad as people fear when they actually look. 20 minutes of looking now beats months of worrying later. So with all of that out of the way, we're finally getting somewhere, and it's time for the proper fact find. And this is a proper deep dive. This is where we get into the actual details, your full income, your monthly outgoings, gas, electricity, water, council tax, food, the lot. Your existing credit, your savings, what you want to borrow, what kind of property, what your plans are. It takes about an hour, sometimes a bit more. We generally do it on the phone or on a video call. And I'll be taking notes, not testing you. You don't need to remember every number off the top of your head. Your bank statements tell us most of what we need to know. And you can always email stuff to me afterwards. The fact find is about understanding the whole picture, your finances, what you're actually trying to do. We're not there to interrogate you about it. And there's 2 things I want to say about this chapter, clearly because they matter. Number 1, we won't ask you anything we don't absolutely need to know. The questions on a fact find can feel personal because they are personal, but every question have a reason. Either a regulator requires us to ask it or a lender will ask us. So we need the answer to give you the best recommendation. We're not nosy, we're being thorough, so we can do our jobs properly. And number 2, we don't share anything with the lender that they don't ask us to. The information you give us stays with us, except for what specifically goes onto the lender's application form. Your full life story does not need to get bundled up and sent off. Your privacy is taken very seriously. The aim is that by the end of the fact find, I've got everything I need to give you a proper recommendation, and we don't have to keep coming back to ask for one more thing. Sometimes we do have to come back, usually because a particular lender has asked us for something specific. But the plan is always to try and do it once and once only, and to do it properly first time. Right, so we've done the fact find, we've pulled your credit, we know what you can afford with which lender, and we've agreed which mortgage product fits. The next step is what's called decision in principle, sometimes called an agreement in principle, the AIP. I've done separate videos on this because it's the single most misunderstood thing in the first-time buyers process. So here's the short version. If you want the proper version, watch the AIP Mythbuster on the channel. What an agreement in principle is a soft check by the lender based on headline information that we've submitted, where they say, yes, on paper, this person could probably borrow this amount. Note the word probably. What it isn't is an offer. The lender hasn't seen your pay slips, they haven't valued a property, they haven't done full underwriting, none of that has happened yet. What an agreement in principle is useful for is getting estate agents to take you seriously when you make an offer. It gives you a working number for what you can offer on. Most estate agents are going to want to see that agreement in principle before they'll even consider putting an offer forward to a seller. And quite a lot will want to see it before they'll even let you view a house. But one thing that most people don't realise that an agreement in principle can do is it can fall apart on formal application. So don't go popping champagne when the agreement in principle lands. Pop it when the formal mortgage offer arrives, which comes much later, after you've found the actual house. Agreement in principle in hand, you're ready to go house hunting properly. Now, when we come round to house hunting, I'm not going to tell you which house to buy. That's not my job. But I will tell you about things to think about while you're looking, that an average first-time buyer doesn't, and the thing to do once you've found the one you love. While you're looking at houses, there's 3 quiet questions worth asking yourself. First of all, what's the one thing you genuinely won't compromise on? Is it off-street parking, a garden, not on a main road, room for a home office? Decide that before you walk into anywhere, because the moment you fall in love with a kitchen, you'll forget about what you said, so write it down. Second, the running costs. A bigger house has bigger heating bills. An older house with single pane windows is genuinely cold in February. The asking price is one number. The total cost of living there is a completely different number, and both matter. And third, the area. A property is bricks. A neighbourhood is your life. Walk the streets at different times of day. Visit on a Tuesday and on a Saturday morning. If something doesn't feel right, it usually isn't. But once you've found a house, here's what happens next. You're going to make an offer through an estate agent, and often the first offer isn't accepted. That's perfectly normal. Negotiation is a normal part of this process, so don't take the first no as a final no. But once you do have an offer accepted, you're going to tell me, and we get the formal mortgage application going with the lender. Your agreement in principle becomes a proper application. The lender sends a valuer to look at your property, your solicitor gets instructed, everything moves into a new gear at this point. From accepted offer to mortgage offer is typically 4 to 6 weeks. From mortgage offer to keys, sometimes another 4 to 6. So make peace with the fact that this stretch is a bit slow. The wheels are turning, you just can't see them. So the mortgage offer arrives. The lender has formally underwritten the loan and is willing to lend you the money. This is the moment when you can genuinely start thinking about popping that champagne. But you're not there yet. And now we go into the legal process. And this is what your solicitor, your conveyancer is there to handle. And I want to be honest about this stretch because it's the bit where most people start to lose their patience and their rag. Here's what's happening behind the scenes, even when it looks like nothing is. Your solicitor's doing local authority searches, checking for planning issues, flood risks, mining searches. If you're in certain parts of the country, environmental searches. They're going through the property's deeds, raising inquiries with the seller's solicitor, getting answers, raising more inquiries. They're getting your mortgage funds organised. They're handling the deposit funds. None of this is glamorous, and most of it is completely invisible to you. The thing that genuinely gets cases stuck is something I see every week, the chain. If your seller is buying somewhere themselves, and that seller is buying somewhere themselves, the whole chain has to be ready to move on the same day. And any 1 week link anywhere in that chain slows everything down. Your survey will come back during this period too. Now, I've done whole videos on surveys before and what to do if your survey looks scary. Check out my other channels. They're all on there. Give them a watch. The headline will read something along the lines of don't panic, don't pull out on the first read, talk to someone. But my basic advice is when you get hold of that survey, read it thoroughly, but don't panic. Don't just pull out of the deal on the first read. Talk to somebody. What you've got to remember is that all the way through this process, I'm in the background. Every single week, I'm chasing your solicitor for updates, passing them back to you, untangling anything that's stuck. The mortgage offer is in your hand, but the work isn't finished. Not by me, not until you've got the keys. And all of this legal wrangling, all this stuff that goes on in the background, it all eventually leads to a thing we call exchange of contracts. And once that happens, that's the moment that you're legally committed. And following that, it's completion. Usually a few days to a few weeks later. That's the moment the money moves and the keys are released. And finally, we get to completion day. The money moves around. The estate agent hands you the keys. You stand in your own kitchen in your own house for the first time. Happy days. Take those photos, get them up on Instagram, send them to your parents, have a glass of something nice. You've earned it. But in the days that follow, there's a few things that are worth doing. First of all, there's protection. We spent the whole journey getting you onto the ladder, but keeping you there matters more. If you've got a mortgage and no life cover, no income protection, no critical illness cover, then a serious illness or a job loss is the thing that takes your house away from you. Protection is what keeps the family in the house when life goes sideways. It's not an upsell, it's the other half of the mortgage. Talk to your mortgage advisor about getting your protection sorted if they've not already done it. If you've been talking to me about your mortgage, then we'll have had that conversation well ahead of you getting those keys. But it's no good talking about it in 5 years' time. The problem with insurance is you can only claim on it if you've actually got it. And secondly, diary the date for when your fixed rate ends. Stick it in your calendar. And then wind back 6 months and put that date in your calendar as well. Most first-time buyer mortgages are fixed for either 2, 3 or 5 years. And the day that fixed rate ends is the day your monthly payment can change dramatically. 6 months before your fixed rate ends, you can start the remortgage conversation. I've done lots of other videos on that. Again, go and look at them in the channel. Diary that 6-month date because that's when we need to be talking again. Put a big red circle about it and make sure you don't forget it. Because not actioning that could cost you serious money. Right, that's the journey from the first thought of could I do this to the moment you post those pictures on Instagram from your new kitchen. And of course, the 2 things to do afterwards. If you found this video useful, then drop me a like and a follow. If you're at any stage of the journey and you'd like to talk things through with a real person who's not trying to sell you anything, the links to get in touch are either in my bio or in the comments below. There's no charge for a discovery call. There's no obligation. There's just a 20-minute chat with someone who does this every day. I'm Patrick Weightman, your local East Midlands mortgage and protection advisor, serving clients up and down the UK. Drop me a like and a follow for more and hit the links in my bio to get in touch. And of course, the obligatory note, think carefully before securing debt against your home. Your property may be repossessed if you do not keep up repayments on your mortgage. Speak to you soon. Bye-bye.